Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Fabrinet quarterly report. Fabrinet offers a diverse range of businesses and services that cater to various industries. At its core, the company provides advanced optical packaging and precision manufacturing services, including process design and engineering, supply chain management, and testing. These capabilities enable the production of complex optical components and modules, such as reconfigurable optical add-drop multiplexers, optical amplifiers, modulators, and transceivers. In addition to these core services, Fabrinet also offers a range of products that support various applications. For instance, the company provides high-speed interconnect capabilities for data centers and computing clusters through its active optical cables. It also designs and fabricates custom glass products, including application-specific crystals, lenses, prisms, mirrors, laser components, and substrates. Furthermore, Fabrinet serves a broad range of industries, including original equipment manufacturers (OEMs) of optical communication components, modules, and subsystems, industrial lasers, automotive components, medical devices, and sensors. The company's products are used in various applications, such as semiconductor processing, biotechnology, metrology, material processing, automobiles, and the medical industry. In summary, Fabrinet's businesses and services include advanced optical packaging and precision manufacturing process design and engineering, supply chain management, testing, production of complex optical components and modules, high-speed interconnect capabilities for data centers and computing clusters, custom glass products, including application-specific crystals, lenses, prisms, mirrors, laser components, and substrates products used in various industries, including plus optical communication components, modules and subsystems, plus industrial lasers, plus automotive components, plus medical devices, plus sensors. Fabrinet's stock price skyrockets. A year of unprecedented growth in the past year, Fabrinet's stock price has experienced an astonishing surge of over 116.55%. Driven by a combination of strong financial performances, optimistic guidance, and growth in key market segments. One major factor contributing to this growth is Fabrinet's consistent ability to surpass analyst earnings per share, EPS, and revenue expectations. The company has reported record-breaking earnings in multiple quarters, including Q4 fiscal year 2025 and Q1 and Q2 fiscal year 2026. These results have been fueled by the company's increasing involvement in high-performance computing, HPC, and artificial intelligence, AI data centers. Fabrinet's strategic diversification into these emerging markets has paid off, with the company reporting significant revenue growth and exceeding its own guidance. The expansion of AI data centers has been a key driver of this growth, with Fabrinet's strong Q2 fiscal year 2026 results directly linked to several major programs with key customers in this space. In addition to its financial performance, Fabrinet has also made strategic investments in capacity expansion, including the announcement of plans to increase manufacturing capacity in Thailand. This move is expected to support continued demand for wavelength division multiplexing, WDM, modules, and other high-growth products. While the stock experienced a slight dip after the latest Q2 2026 earnings report, this was largely attributed to a sell-the-news reaction rather than a reflection of poor underlying performance. Overall, Fabrinet's strong financials, strategic growth initiatives, and increasing involvement in emerging markets have driven its stock price to nearly double over the past year. The primary drivers of revenue growth or decline can be identified through a thorough analysis of various market trends and customer demands. On the one hand, revenue growth is primarily driven by the expansion of the optical communications market, diversification into new markets within the optics industry, and high demand for high-performance computing. Additionally, key customers' increasing demand for both optical communications products and non-optical communications products has also contributed to revenue growth. Furthermore, the growth in automotive revenue and the increase in key customers' demand have also played a significant role in driving revenue growth. On the other hand, revenue decline is primarily driven by reduction in orders from key customers, consolidation in markets served, and decrease in percentage of revenues generated from outside North America. Additionally, customer demand or supply chain disruptions, cancellations, delays, or reductions of customer orders have also contributed to revenue decline. In terms of geographic revenue growth/decline, North America has experienced significant revenue growth, while Asia-Pacific and others have seen a decline. Europe has shown moderate revenue growth. Segment-wise, the optical communications segment has witnessed substantial growth in both datacom and telecom segments, while the non-optical communications segment has also seen growth in automotive and industrial laser segments. The net income of the company underwent significant fluctuations over the given period. Initially, it increased by 27% from $164,030,000 to $208,554,000, indicating a positive trend. However, this growth was short-lived as it decreased by 25% to $148.8 million in the subsequent period. The reasons behind these changes were largely attributed to variations in depreciation and amortization expenses, inventory obsolescence impairment, and unrealized losses on exchange rate and foreign currency forward contracts. In terms of profit margins, there were mixed results. The gross profit margin showed a slight increase from 12% to 12.2%, but this growth was not sustained as it decreased to 12% in the following period. On the other hand, the operating income margin demonstrated an upward trend, increasing from 9.5% to 10.1%. This improvement can be attributed to increased efficiency and cost management. The decrease in profit margins was largely due to increased costs related to addressing supply chain issues. Despite these challenges, the company's net income showed resilience, with a notable increase of 30.1% for the 3 months ended December 26, 2025. However, this growth was not sustained, and the net income decreased by 25% in the subsequent period. Overall, the company's financial performance was marked by fluctuations, but it demonstrated its ability to adapt and respond to changing market conditions. The company's financial performance indicates a strong ability to generate cash from its core operations. A key indicator of this is the positive operating cash flow, which measures the amount of cash generated from the company's daily business activities. According to the latest available data, for the 6 months ended December 26, 2025, the net cash provided by operating activities was a significant $148,827,000. This substantial figure demonstrates that the company is successfully converting its profits into cash, which can be used to fund future growth initiatives, pay off debts, or distribute dividends to shareholders. The positive operating cash flow also suggests that the company's management has effectively optimized its operations and made efficient use of resources, enabling it to generate a substantial amount of cash from its core activities. Overall, the company's ability to generate positive operating cash flow is a testament to its financial health and stability, providing a solid foundation for future growth and success. The company's debt level has undergone significant changes over the past year. Initially, the total debt increased from $849,620 to $1,083,812. However, this trend was reversed with a decrease of 18.3% between December 26, 2025 and June 27, 2025. Furthermore, by December 26, 2025 and December 27, 2024, the company reported no outstanding debt. In terms of interest expenses, there is limited information available to determine if they have changed significantly. The weighted average interest rate on cash and cash equivalents fluctuated between 3.8% and 4.4% over the past year. This variation does not indicate a substantial change in interest expenses. Management is optimistic about the company's outlook and strategy. They expect to expand relationships with existing customers and attract new ones due to their diverse range of services and capabilities. This expansion will be driven by a significant investment in a new manufacturing facility at their Chonburi campus, which will enable them to meet growing demand. The company is confident that its current financial resources will be sufficient to cover working capital and capital expenditure needs for the next 12 months. However, they acknowledge the potential need for additional financing in the future. Management also intends to continue diversifying across other markets within the optics industry, including semiconductor processing and biotechnology. Internationally, the company expects a significant portion of its revenues to come from international sales, but acknowledges the associated risks such as compliance with laws and regulations, economic conditions, currency fluctuations, intellectual property rights, and political instability. Despite these challenges, management is committed to continuing investments in manufacturing operations in the PRC. Overall, the company's strategy focuses on expansion, diversification, and investment in new facilities and markets. The company's financial history reveals a commitment to shareholder value through dividend payments. This decision demonstrates a focus on rewarding investors for their loyalty and trust in the company's growth prospects. By distributing profits as dividends, the company acknowledges its responsibility to its shareholders and provides them with a tangible return on investment. Concerns about inventory buildup or supply chain disruption are prevalent throughout the financial report. One major concern is the management of inventory complexity, which can lead to single-source suppliers and subsequent disruptions. The data also shows a significant increase in raw materials, work in progress, and finished goods inventory from June to December, indicating potential issues with inventory buildup. This buildup can be exacerbated by excess materials being held if customer orders are delayed or canceled, leading to further concerns about inventory management. Additionally, there is a risk of excess or obsolete inventory write-downs, which can result in additional costs and penalties. The inability to use purchased materials for other customers also poses a challenge, as does the reduced or delayed product shipments. Supply chain disruptions are another major concern, driven by increased costs from tariffs and trade restrictions. Suppliers are struggling to meet demand, and there is a potential future escalation of trade restrictions that could lead to retaliatory actions by foreign governments reducing demand. Furthermore, political unrest in Thailand has disrupted shipments, adding to the supply chain concerns. That concludes the financial summary for Fabrinet. Feel free to comment below, and I will be happy to answer them when possible.